Hi students, welcome back to Commerce Veda, continuation of series of amalgamation which we are discussing since last three sessions. And today we'll be doing one more solution or one more problem, and we are working out the solution for purchase consideration as we discussed last session about net payments method. This session will see what exactly the question talks and which method we need to identify. In the question, you have given a balance sheet. So you have share capital reserves, long-term borrowings, trade payables, and property, plant, equipment, non-current investments, inventories, trade receivables, and cash equivalents. When we go in detail, the share capital consists of equity and preference. The share capital consists of equity and preference, and long-term borrowings consist of debentures, and fixed assets PPE consists of land and building and investments. So this is the overall question, and what it says that B Limited agreed to take over. B Limited agreed to take over the assets and liabilities on the following terms and conditions. Now, what are the terms and conditions? Discharge the debentures at a premium of 10% by issuing 15% debentures in X Limited. So any payment to debentures is not a part of purchase consideration. So we'll see where it works. Right. Now, PP is taken at 10% above the book value. So revalued the book value of PPE and investments at par. So PPE is increased the valuation, but investments were taken only at cost. And preference shares are discharged at a premium of 10%. So preference shareholders were given whatever the amount of due to preference shareholders is to be paid by adding 10% by issuing new shares in B Limited. So this is A Limited, right? In this question, if you see, A Limited is the transferor, B Limited is the transferee, B acquiring A. Right. Now, preference shareholders will get 10% more than their due by issuing shares in B. Equity shareholders will receive 3 equity shares for every 2 N. So 3 equity shares of 10 each for every 2 shares in B Limited means if I am holding 2 shares in A, I'll get 3 shares in B. Issue 3 equity shares of 10 each for every 2 equity shares in B Limited and pay the balance in cash. So now, here the important word is balance in cash. So there is no clarity on net payment because equity, price and quantity given, preference, quantity and price is given, but the balance in cash, it says a balance amount in cash. Where is the, how do we identify what is the balance amount in cash? In such case, we should use net assets method. Why? Because there is a incomplete information on various forms of payment. There is an incomplete information on various forms of payment. Now what should we do? Net assets method. The net assets method, what we should first say, assets taken over Which values? Agreed values. What are the assets for in the question? Land and building. And they say current assets are taken. Current assets. See, it says current assets at a discount. So total current assets as a group they're taken at a discount without giving individual values to any assets. So current assets at a discount and non-current investments. These are the assets in the books of A Limited, right? Less. As we know, any payment to debenture holders and creditors should not be formed part of PC. So we should compute net assets after deducting the amounts payable to debenture holders and trade payables. So here next deduct debentures. Again, less liabilities taken over agreed values, debentures and what else are there? Trade payables, debentures and trade payables. Now we'll see what is land and building, how it is being computed and taken over. Now land and building, the book value here is 3250. They added 10% up. So the 3250 you should increase by 10%. So the value is 3250 into 110% will get 3575. And current assets, the book value here is 2 plus 2 plus 2 plus 2 plus 2 plus 2 plus 1, 5. So the total current assets book value is 5. Taken at 90%. Read the question again. Current assets at a discount of 10% and current liabilities at book value. Current assets at a discount of 10% and current liabilities at book value. Coming back, 10% discount means we reduce it to 90%. And non-current investments at par value. Par value means the book value, which is where is the non-current investment sits, is the book value at par. So 600 at 100%, that is 600. So the total assets taken over is 4625. So this is taken at 10% more, higher. Either I can write higher 10% or what I can say is at 110%. This is book value, this is revision, and this is revised value. Now, this is the total of assets taken over by B Limited. And debentures, if you see, debentures discharged 15% at a premium of 10%. So whatever the value in the books, we should pay them 10% more. That is, the debenture value is 7. Hence, I should take here 7 and discharge at 10% more. So I have to pay them 770 in the form of debentures in the new company. And trade payables at par. At par, trade payables is 500. So trade payables at par 500 at 100%. 500. So total liabilities taken over is 1270. So assets taken over 4625, land and building at a higher valuation, current assets at a lower valuation, higher valuation, lower valuation, and in non-current investments at an equal valuation, debentures at a higher valuation because discharging at a premium, and trade payables at equal valuation, book value. So the net of these two is called net assets, are 4625 minus 1270, 3355. This is nothing but purchase consideration. To whom? To shareholders. Because we reduce the amounts payable to debenture holders and creditors. As per the definition also, purchase consideration specifically excludes payment to debenture holders, creditors, lenders, or for expenses or liquidation. So this is the net assets. So the total purchase consideration is 3355. Now we need to know the breakup of purchase consideration. How do we know this? Now, to preference shareholders, it says you should discharge them at premium. So, to preference shareholders, you should pay 770, not 770. It is the debenture holders. We'll see what is preference capital in the books. Preference capital in the books is 750. Okay, so coming back to preference shareholders, 750 into 110%, 825. So 825 worth of shares in the new company or the transferee to be given to the shareholders of transferor, preference shareholders of transferor, and to equity shareholders, it says 3 shares for every 2 shares held. Shares held were 1,50,000. By 2 into 3, you will get 2,25,000 shares into 10. The amount should be 22,50,000. We are doing in thousands. This is 2250. 2250. Now 825 to preference, 2250 to equity, and the balance out of 3355 is 280 cash. To preference equity shareholders, there are 2 parts. Shares and cash. 280. This is to equity shareholders. The total here is 3355 total PC. How you got this is 3355 minus payment to preference minus payment to equity in the form of equity share capital. So 3355 minus 825 minus 2250 is 280 in the form of cash. We use this method, net assets method, because cash is actually a question mark in the question, which is not clearly given how much cash. It is the balance in cash. Hence we use net assets method. So this is the breakup of purchase consideration, and this is the and this is the way how do you present the answer. This is a working note. Computation of purchase consideration. Land and building taken at 110%. Current assets taken at 90%. Investments taken at 100%. This is the value of total assets taken over. But we are not paying for total assets to equity because we have to pay some amount to the liabilities, which are debenture holders and trade payables in this question. So we reduce that because purchase consideration should not include payments to debenture holders and creditors and liquidation expenses. So we removed it and we got what is the net asset, nothing but the purchase consideration and the breakup, how much we agreed to pay to preference and how much we agreed to pay in the form of equity shares, and the balance is in the form of cash to equity. This two goes to equity and this goes to preference shareholders, totaling to 3355, which is exactly what the net assets of the company taken over, right? So the solution is simple. If we read and understand the question in detail, everything will be available in this particular place. You know the scheme in total. Based on the scheme, you should identify which method. Here we identified because balance in cash is the key. So it is net assets method. Hope you guys understood the solution and the breakup in detail of the purchase consideration. We'll meet with another video with another sum. Practice hard, do the sum. The question are taken from CA Inter recent study material from the amalgamation chapter. Signing off, see you back.